Okay, so here's an example where in the live room today, you can see that I've adapted to a smaller sort of stage 3 value here today, and YM's got the same as well. It's pretty decent range. Now I've been mentioning in the live room about waiting for the YM to trade 480 because I don't really see it failing the auction downside until that happens. So a lot of people will sort of jump in the trade because they're scared or they have the fear of missing out, as I say, but they're just scared that the move's going to be gone. If it's gone without that, and so be it. You know, there'll be another better trade. It's better to wait for the right setup rather than the wrong one and just take it because you want to. So basically, there's a couple of things that might happen here. Now, 79 quarter might trade, which doesn't really leave a lot until, you know, around 83, potentially 84 for resistance. So there's a little bit less to play with there. So you can always drop your size. So for example, if you take the trade at 79 quarter, when we lift off as there, you consider maybe a push like 83, 84. So you'll think, okay, well, there's less potential reward there now. So I drop my size. So instead of trading 6, you might trade 3. Instead of trading 8, you might trade, say, 4 or 3 as well. So that you can position size to manage the risk. Nasdaq's already at the unfair high, but I'm looking at a situation here. Once the YM trades 480, I'm just explaining right now here that if the ES is trading 77 quarter and we're still lifting offers around 77 quarter, 77 half, it's still a good long. But it might be a little bit further up. In that case, like above the 78 area, I would then wait for the lift the offer at 79 quarter, 79 half. And when I say lift the offer, I want it to see. I want to see the market lift the offer at a volume that is a level of volume that is significant for the E-mini S&P, which in my case is a level 3 delta, which is 200 contracts, which is basically the net difference between the volume traded on the bid and the offer. So on my footprint, you will actually see this bright shading of green at any time that level 3 delta is there. So that's the difference between the left to the right. Okay, you can see 826 versus 266. Quite a lot more buying on the offer at that price. 708, a little bit more than 574. It's not quite 200 contracts or more, so that's why it's a lighter shade of green. Okay, so if it's more sellers hitting the bid, you'll see the red prints. Okay, so that's how the footprints sort of, just to add that sort of visual display, because as human beings, you'll pick up the visuals much more quickly and understand that a lot quicker than sort of number crunching. So I don't really read the numbers, I really just watch the colors, but in the right place at the right time. So for example, if the YM is trading 480 and at least trading there, I don't really need to look at the order flow there, just trading there. As long as the ES is lifting offers between 79, 79 quarter, I'd say 79 quarter to down around 79. So I want to see the buyers lift the offers there. Then the trade, as long as the YM trades 480 here, it's on. However, if it's lower, the ES, because it might pull back a little further, then 77 quarter to 77 half is the two prices I would watch to see if the buyers lift the offers. Again, still considering that the YM needs to be trading 480 and above. Okay, so it could be a little bit higher, but it needs to be at least holding above 480. And that way, you know, you cut out all the shitty trades where a lot of people will be trying to buy these lows, you know, and just trying to pick the bottom or pick the top, which you don't need to do. You know, if you know where the market's potentially going from and to, with a good clear concept of where value has been found, then you don't need to pick tops and bottoms. You can see where the market's potentially going to, and the destination is a lot more important than where it started. Okay, the idea here is that the clarity provides the confidence, and most importantly, gives you the ability to be patient, because patience really comes from knowing what you are looking for and what you are waiting for, but with clarity. Be very clear with what you are going to trade. If you are very, very clear with what you are going to trade and the situation you need to see presented there before you trade, you will wait for it because it's very, very clear. Okay, so now this is very, very specific. What prices are going to trade on two products here, which I'm using in Confluence. When you come into the market with such a clear process, it's highly unlikely you're going to trade anything else. You're going to trade the plan.